Good morning and welcome. It's a new week. You're watching Market Cafe on ET Now. I am Harsh Saita and with me is Ankita Saxena. Of course, we've seen a good week through last week, and Ankita is going to take us through what global markets have really done on Friday as well as through last week.
Good morning to you, Harsh. Now, markets finally seem to be picking up pace again after that momentarily losing streak that we saw. On Friday, the markets ended on a strong note. The Dow Jones Industrial Average added 330 points, while the S&P 500 advanced 1.8%. Both the indices snapped a three-day losing streak. Meanwhile, the Nasdaq Composite rose 2.6% with the help of Netflix and Alphabet. Now, the Nasdaq was also the outperformer for the week, posting up more than a 0.5% gain and its third positive week in a row. Now, the Dow Jones finished the week lower by 2.7% and the S&P posted a 0.6% loss, both breaking the two-week winning streak. Now, all of the major averages are still in the positive territory for the year. Luckily, we are still in the positive territory for the US markets, even though we had a momentary lapse in the rally that we saw coming in till Thursday. Now, the European markets also nudged higher on Friday as stocks attempted to rebound from the Thursday's sell-off. The Pan-European Stock 600 closed 0.3% higher. DAX closed up 0.7%. CSE was up 0.6%, and FTSE closed up 0.3% in trade. So that was a roundup of US and the European markets. Harsh, take us through what the crude is looking like.
Well, yes, Ankita, second straight week of gains for crude, so definitely a positive there for crude stocks. We're looking at oil at around $81.3 a barrel. We're looking at Brent above $87 a barrel. Not sure the last time I saw those kind of rates, Ankita. So clearly on a high, in fact, the highest since the 1st of December to be absolutely accurate. And couple of things really guiding crude. One, we've spoken about China last week, the reopening. That's what's really aiding crude forward. The other piece is that US has added to its inventory. 8.4 million barrels is what they've added up to the week ended 13th of January. So that is keeping pressure on crude prices higher. And that's what's really currently up with crude. We need to, of course, see how the current week goes.
Right, thank you for that roundup, Harsh. Now let's just quickly look at the events that you need to watch out for today. First up, we have the European Union's consumer confidence data that's likely to come out today. We also have the European Union that will be discussing the Ukraine issue that's under discussion right now. We also have Bank of Japan's December meeting minutes that will be released as of today. We also have, on the domestic front, we have the Indian Navy that is set to commission the fifth Kalvari class submarine named Wagir today. So that is something that everyone will be watching out for today. And we have Angel and Wipro. Today is the last day to be eligible for dividends, and we have Axis Bank's Q3 earnings coming out today. So these are the events that you need to watch out for today.
Well, thanks so much for that, Ankita. We'll quickly move on. The European Central Bank, the ECB, of course, should continue with half-point interest rate increases at the next two meetings. That's according to Governing Council member Klaas Knot. He also said that the time to slow the pace of hikes is still far away.
And White House Chief of Staff Ron Klain is preparing to step down in the coming weeks. Klain, a longtime advisor to President Joe Biden, supported Biden through his 2020 campaign. Jeff Zients is likely to serve as the next Chief of Staff.
Well, and at least 10 people are dead and another 10 hospitalized after a mass shooting in Monterey Park, California. The shooting happened at a dance studio near Lunar New Year festival celebration. Authorities have yet to reveal a possible motive for the shooting.
And New Zealand's Labour MP Chris Hapkins is all set to replace Jacinda Ardern as the Prime Minister after becoming the only nominee for the party's leadership. This comes day after Jacinda Ardern announced to step down in February. How long Hapkins will be in office is uncertain as New Zealand holds a general election in October. Hapkins is currently Minister of Police, Education and Public Service.
Well, and the Japanese Prime Minister Fumio Kishida said he would nominate a new Bank of Japan governor next month. The current governor's 5-year term ends on the 8th of April. The terms of Kuruda's two deputies, which is the governor's two deputies, end on 19th of March. The three nominations must be approved by both houses of parliament.
And federal prosecutors seized nearly 700 millions in cash and assets connected to Sam Bankman-Fried, primarily in the form of Robinhood shares that were owned by the FTX founder.
Well, and Shah Rukh Khan-starrer Pathaan is set to release next week, and Bollywood is riding its hopes on the long weekend. After a string of failures, this could be a new beginning for Bollywood in the new year. Unfortunately for fans, ticket prices have skyrocketed. In fact, in Delhi, evening shows are selling for as much as 2,100 rupees, while even tickets for morning shows are selling for $1,000. So what's driving this trend? And with
I think it has generated so much heat and excitement that the producers must have thought that no price is big enough, or no ticket rates are expensive enough for the public. And frankly, what you're talking about, 2,100 and 1,000 rupees, is in select multiplexes only. It's not as if every cinema is selling the tickets at this price. So there is opportunity for everybody to see. Those who can't afford to see it in a multiplex which is charging 2,100 can see it in another cinema where the ticket rate may be probably 200 or 300 rupees, a single screen cinema, or a multiplex where the ticket price is lower. And I think it's a question of demand and supply. Looking to the craze the film has generated, the hype the film has generated, I think there is no restriction on cinema tickets being priced at this much only. There's no cap. So it's a pre-trade. I think they are justified.
Within about 30 hours of the advance bookings opening up, you're witnessing advance booking numbers which are, coming close to the KGF numbers, which are breaching the Brahmastra numbers very soon. And that's testimony to the fact that the audience doesn't seem to mind the ticket rates that the movie is at. And eventually, I think, the movie ticket prices, as Mr. Nata said, are somewhere a derivative of the law of demand and supply. And Pathaan clearly seems to be a movie that the audiences are willing to pay a bit of a premium for. And having said that, like he said again, there are a select set of multiplexes which are pricing those tickets at those rates. And I can guarantee you, those cinemas don't even represent 5% of the capacity of the movie across the nation when it comes to the exhibition sector. Like, we run cinemas in tier 2 towns, and my tickets are anywhere between 100 to 150 bucks, which is extremely affordable and convenient for the widest possible section of moviegoers. So there is something out there in the context of Pathan's, exhibition for every section of the social strata, and I'm sure they'll come to the theaters in big numbers and ensure that the opening figures for the movie are unprecedented.
Well, are you going for Pathaan, Harsh? With that kind of ticket price?
That's a tough question. Forget the ticket price. That's a tough question. But I'd love to, Ankita. So yes, we'll definitely be trying to catch that movie next weekend. My wife and myself.
All right. With that, it's time to slip into a short break. You don't go anywhere. There's lots more action coming up on the domestic front on the other side. Welcome back. You're watching Market Cafe with me, Ankita Saxena, and my co-anchor Harsh Saida. Let's quickly move on to news coming in on the domestic front. Now, some fresh layoffs happening at IT giant Wipro that has laid off more than 400 fresh employees for poor performance in internal assessment tests. The company issued termination letters to all the affected employees and stated that despite adequate training, they have failed to perform. The statement by Wipro said that they were letting go of 552 freshers as they could not meet company's working standards.
And we get you an exclusive voice all the way from Davos. We have Vijay Shekhar Sharma, founder and CEO of 197 Communications, which is Paytm, who spoke to our managing editor Nikunj Dalmia about Paytm's profitability. When asked if Berkshire Hathaway is still an investor in the company, this is what he had to say. Listen in.
are still shareholder full as much at the time of IPO. September 2023, which we've given guideline for EBITDA before ESOP cost, we will definitely be able to beat it by significant high pre-results. And it has been possible because the estimation of how payment will make money, whether the subscription product will take off or not, estimation of how credit will perform, the portfolio and many other things, our partners based on which they give us money, all those things have come out great supporting numbers to us to tell that we will be able to deliver profitability way before September 2023. Obviously, you will see this quarter's number coming very soon, and hopefully by that time the picture, that word that I'm saying, would get far more clear.
All right, that was Vijay Shekhar Sharma for you from Davos. Moving on, big boy Reliance came out with its Q3 results last evening, and the numbers are in line with the estimates. Mostly powered by their legacy of oil to chemical businesses, yet another record quarter on profitability front. When it comes to its telecom arm, that too has seen a 28% growth in profits. ARPUs have grown at 178 crores versus 177 on a quarter-on-quarter basis. My colleague Somit is here to give us a lowdown on all the number crunching from Reliance Industries.
Well, if you see, compared to the street estimates, the revenue and net profit is pretty much in line, but the big beat for Reliance Industries has come in on the EBITDA front. Now, street was expecting the EBITDA number to be close to 33,700 crore rupees, but the company has reported an EBITDA of close to 35,247 crore rupees. So this big beat has naturally come in from the O2C segment, because there the number has grown around 16% on a sequential basis, and the O2C segment's EBITDA is close to 13,900 crore rupees. Now, this is on the back of the fact that in the third quarter of FY23, the export tax was removed from SEZ, that is a special economic zone where Reliance Industries has one of its refinery unit, and also on a relative basis, if you see, the impact of windfall tax was lower in the third quarter of FY23. Now, moving on to the other segment, that is the retail segment, the performance is pretty much in line with what the street was expecting. Retail EBITDA is higher by around 7%, and that is what the street was expecting. And the biggest growth, or the sequential growth, has come in from the oil and gas exploration segment, and that is purely on the back of higher production and higher gas prices in the third quarter. We have seen a sequential growth of close to 22% when it comes to the gas exploration business. And lastly, when it comes to Jio numbers, we have seen a marginal miss coming in on the EBITDA front, and that is because the ARPU number for Reliance Jio has also come in slightly below than what the street was expecting. Street was expecting the ARPU number to be close to 179.6, but the company has reported an ARPU of 178 rupees per user per month. Now, to sum it up, the result, the O2C segment was a beat. Retail, oil and gas exploration was in line with the street estimates. Jio was a marginal miss, but the overall numbers on the EBITDA front looks a good 5% beat compared to what the street was expecting.
Well, a beat coming in there for Reliance. I obviously have to wait and watch as to how the stock reacts in trade today. But sticking with the richest, Gautam Adani also plans to make at least 5 of his companies public by 2028. The move could help the port-to-power conglomerate improve its debt ratios and broaden its investor base. The company's CFO said that at least 5 units will be ready to go in the market in the next 3 to 5 years. These, of course, include Adani New Industries, Adani Airports Holding, Adani Road Transport, Adani Conex Private, which is the group's metal and mining unit, all of which are likely to become independent units.
Right, and on to an ET Now report. Maruti Suzuki India is probing allegations of wrongdoing by some executives of the company's purchase department. This is on the basis of a complaint filed by a whistleblower. The car maker has hired accounting firm KPMG to conduct a forensic audit. The allegations under inquiry relate to executives purportedly providing benefits worth crores of rupees to some vendors and supply partners.
Well, and switching over on to another ET report, Hindustan Unilever Managing Director and CEO Sanjeev Mehta has defended the hike in royalty payments to Unilever. He said the company gets immense value from its parent and that these arrangements provide it with a significant competitive advantage. He said that payments are justified and in the interest of HUL itself. Mehta also said that the merit of these arrangements will be understood soon, of course, and that business will take EBITDA margin increases into its stride.
Right, and let's just quickly go across to news for the hearing impaired.
Good morning, welcome back. Now, we did see that markets in the US were in the positive and well in the positive, 1% plus gains on Friday. And what we're currently looking at in terms of Asian markets is we're seeing green. And where US futures are concerned, let me take that first. US futures currently look flat, slight negative bias being seen across US markets at the moment. And Asia largely in the green. We're seeing ASX 200, which is flat, but you're seeing the Nikkei, which is 1.2% higher. We're seeing gains on the Kospi as well, up 0.3%, as well as the Hang Seng up 1.8% in early trade today, and we're seeing the Shanghai up around 0.75% as well. So across the board, we're seeing green at the moment. Our own SGX Nifty is up over 0.5% in trade, so definitely looks positive, almost 100 points plus.
So a positive start coming in for the Indian markets as well, I guess, Harsh. So
Yes.
now we have Ashesha in the studio, who gives us all the stocks and news for today. Ashesha, take us through what are the stocks that we need to watch out for in today's trading session.
Hi, good morning. So Bandhan Bank will be the first one in focus in today's trading session after it reported its numbers in Friday post-market hours, where net interest income came in at 2,080 crores. A downtick of 2% is what we saw on a year-on-year basis. A GNPA at 7.15%, downtick of 4 basis points on a sequential basis. Pre-provisioning operating profit increased by about 24% on a quarter-on-quarter basis. Net interest margins on an annualized basis stood at 6.5% for the quarter gone by. Apart from this, management also said that asset quality and stress is behind them, and they expect overall business momentum to remain robust from Q4 FY23 onwards. Oberoi Realty will also be in focus. They came out with operational data for the quarter gone by, where units booked stood at 181 versus 132 in the previous quarter. Booking value stood at 639 crores versus 1156 crores that the company had reported in the second quarter. Tanla Platforms will also be in focus. It reported its numbers on Friday post-market hours, where net revenue from operations stood at about 870 crores, down 2% on a year-on-year basis. Profit after tax, meanwhile, declined by nearly 27% on a year-on-year basis, and margins also declined 550 basis points on a YOY basis. High-tech pipes will also be in focus on the back of some block deals that took place on Friday, where Motilal Oswal Business Advantage Series 2 bought about 1 lakh shares at the price of 937 rupees per share. Apart from this, Motilal Oswal Equities Opportunities Fund also bought 2 lakh shares at 937 rupees per share in high-tech pipes. So keep an eye out on this one on account of the big block deal that took place on Friday.
Well, thanks, Ashesha. You've also been going through all the brokerage notes that have been coming in, tons of them obviously on the back of all those results, and lots of companies in news. So talk to us about those brokerages.
Absolutely. First up, we'll start off with JSW Steel, where Citi has come out with a note. They've downgraded JSW Steel with a target price of 675 rupees per share. They say they expect a potential pricing and margin recovery on account of China reopening in the coming quarters. However, lack of iron ore integration suggests that JSW Steel could be an outperformer in the coming days. JP Morgan, meanwhile, has maintained its neutral rating on JSW Steel with a target price of 630 rupees per share. They say net debt increase is a negative as far as JSW Steel is concerned, but margins and volumes could pick up in the coming quarters. They've raised their FY24-25 EPS estimates by 39% and 30% respectively for JSW Steel. Kotak Mahindra Bank, on that also we have a couple of brokerage notes. First up, Jefferies, where it has maintained a buy rating with a target price of 2,470 rupees per share. They say Kotak Mahindra Bank ticked almost most of the boxes in the quarter gone by. We saw strong growth come in led by unsecured segments. CLSA has also maintained its outperform rating on Kotak with a target price of 2,080 rupees per share. They say growth was robust this quarter and they expect 21% loan growth on a CAGR basis. High operating expenditure investment is expected to continue for Kotak, and margin beat is something that we saw for Kotak this time around, but retail deposit mobilization will be the key to watch out for. Lastly, ICICI Bank also reported its numbers on Saturday, where CLSA has maintained its buy rating with a target price of 1175 rupees per share. They say ICICI Bank is getting better every quarter. Valuations now are looking much more attractive. Jefferies has also maintained a buy rating on ICICI with a target price of 1150 rupees per share. They say net interest margin expansion lifted NII growth this quarter. They've raised their earnings estimates by 5 to 7%, and for now they're maintaining their buy rating with a target price of 1150 rupees per share as far as ICICI Bank is concerned.
Well, thank you for that, Shesha. Do keep an eye out on all these stocks in today's trading session. With that, it's time for us to slip into a short break. You don't go anywhere. There's lots more coming up on the other side.
Welcome back. You're watching Market Cafe on ET Now. Quickly taking you through all the news and stock-specific news that are, of course, tons of stocks which have declared results, and the largest pack is the banking pack. Let's talk about ICICI Bank. Strong quarter ended December. Good results, largely in line with expectations. And let's see what brokerages are saying. What CLSA views ICICI Bank is it's a huge positive. They've given it a target price of 1175 rupees a share. That's a solid 300 rupee upside there that CLSA is giving. What they are saying or suggesting is valuations are becoming more attractive. Mind you, ICICI Bank valuations have fallen quite a bit, 5+%. And what they also believe is they're continuing to see robust loan growth going forward as well. And what they're also suggesting is that there is a NIM spike along with it. So they are seeing this as a positive, and they believe that deposit accretion, which has been slower than the loan growth, is not much of a concern, not a big challenge. What then Jefferies is also suggesting is NIM expansion is going to lift NII growth going forward for ICICI Bank. The fee drag, which partly reflects a change in approach, not really much of a concern. And what they are suggesting is asset quality continues to remain strong, and there's conservative provisioning which is happening. Jefferies also gives it a target price of 1150 a share, so definitely a positive there as well. Bernstein also sees margin expansion and moderation in expenses growth going forward. They are expecting healthy credit growth going forward, and they're expecting a flat fee income. That's where Bernstein is seeing it, with a target price of 1000 rupees a share. All three largely positive. We'll quickly go in and listen to what the management of ICICI Bank had to say.
At ICICI Bank, we aim to grow our core operating profit in a risk-calibrated manner through a 360-degree customer-centric approach and by focusing on ecosystems and micro markets. We continue to operate within our strategic framework and strengthen our franchise, enhance our delivery and servicing capabilities. During the quarter, we have revised our provisioning norms on non-performing assets to make them more conservative for corporate, SME and business banking. These changes resulted in higher provisions amounting to 1,196 crore rupees in the quarter. Going forward, we will continue to operate within our strategic framework while focusing on micro markets and ecosystems. The principles of fair to customer, fair to bank, and one bank, one team, one ROE will guide all our operations. We will be focusing on a risk-calibrated growth. It can come from retail, SME, corporate, wholesale, rural, all parts of the economy. Yes, SME being a little, has been growing at a much more healthier pace at this point of time, which is sort of a fact. In fact, during the quarter, our SME portfolio grew by about 25%, and our business banking grew by 37.9% year on year.
Well, that was ICICI Bank, but we'll quickly switch over to the other banking behemoth. Kotak Mahindra Bank also reported solid set, in fact beat on all counts where Kotak is concerned. Brokerages also echoing that view. Jefferies has a buy rating with a target price of 2,470 rupees a share. What Jefferies is suggesting is that strong loan growth is largely led by unsecured. Mind you, unsecured currently also at 9% for Kotak. What we are penciling in, or what the Kotak management commentary suggests, is that they're going to grow that to the mid-teens. So keep your eye out on that expanding pie of unsecured within that larger loan book. Also, what they're suggesting is that there's a growth in savings deposits, which is really disappointing. So But regardless of that, Kotak still continues to have a strong franchise. They've raised earnings estimates. I'm talking about Jefferies. They've raised earning estimates from FY23 to 25 by around 3 to 7%. And on the back of that, they've of course had a buy stance on Kotak Mahindra Bank with a target price of 2470. CLSA also with an outperform rating on Kotak 2080 is where they are pegging their target price at. They believe that growth has been robust, beaten expectations, and they expect a 21% loan CAGR going forward as well. They believe that higher OPEX investment is set to continue going forward, and they believe that the margin beat as well as the retail deposit mobilization are going to be key deliverables going forward. Let's quickly listen in to what the management of Kotak had to say.
At the overall consolidated level again, our capital adequacy continuing to be healthy with CET1 at 22.3% overall numbers. Our ROA continued to be at 2.7% if I take this quarter and annualize it. The book value per share at 540 overall. And the subsidiaries, we've seen the two NBFCs, which is KMP growing its vehicle finance business 24% on a YOY basis, whereas the Kotak Mahindra Investments saw a sharp tick in this quarter with the advances going up about 16% on a quarter-on-quarter basis. Both the entities having curtailed NPAs as well as pretty decent capital adequacy at 30% or thereabouts for both of them.
Well, moving on to LTI Mindtree's Q3 profit and EBITDA have dropped sequentially, but the revenues have grown. Now listen in to what Debashish Chatterjee, who is the CEO and MD of LTI Mindtree, has to say about this.
It is an honor to be part of this historic moment as we report our first ever earnings as LTI Mindtree. We are proud to have entered the elite league of top-tier IT services companies by merging LTI and Mindtree in a record time to the tune of 100 basis points. With the bulk of the integration cost behind us and in view of the growth tailwinds ahead, our endeavor is to return to our normalized profitability in Q4. We are pleased to report a robust order inflow of $1.25 billion. It is evident that we are embarking on our journey at LTI Mindtree from a position of strength. Our end-to-end services portfolio, comprehensive capabilities, strong sales engine, proven account mining, and healthy balance sheet positions us well to continue delivering industry-leading revenue growth as a combined entity.
Well, and as we listen to that, the SGX Nifty has just gone up 100 plus points. Definitely looks like a positive start for Indian indices. But quickly moving on, Saurabh Mukherjee of Marcellus Investment Managers has added Tata Elxsi in his rising giant portfolio. He also is hopeful of top-line growth in Asian Paints. Let's listen in to what he had to say.
Bearish on IT services. It's like being bearish on steam engines at the heart of the industrial revolution. So I think this time around, I think fairly convincingly, not just TCS, but also Infosys, even HCL Tech, the results quite convincingly show that regardless of what happens to GDP growth in the Western world, the migration to cloud, outsourcing to India, these are incredibly powerful themes that will power through an economic slowdown, and that sort of reinforces our faith, which is why at one level actually in our mid-cap portfolio in Rising Giants, we've gone ahead and added Tata Elxsi. So over and above L&T Technology Services, which was already our existing engineering R&D play, we've added another engineering R&D play, Tata Elxsi, similar sort of drivers. The West needs more Indian help for engineering, for research and development. They don't have that many STEM graduates. We have more STEM graduates. We have high quality companies with great pedigree. So I think this area is something we'll keep looking to build on. A decadal 10-year surge in Western intellect-related work migrating to India. The area where we're a little circumspect, and you could see that, say, both in Asian Paints results and also even Havells results. We don't hold Havells, but I think Air Electrical, it's a good benchmark to observe. There's a degree of top-line softness in Asian Paints' case after, I think, 3 years of blistering top-line growth, where I think they CAGR'd at 17%. We had a soft quarter on the top line. But thankfully, it's made up by the fact that you've seen EBITDA margins recovering as the global commodity wave ebbs. Asian Paints, I think, saw a 400 bips jump in EBITDA margins.
Well, that's the word coming in from Saurabh Mukherjee. Now let's quickly look at the lineup for the market. First up is Rahul Malani on the bank earnings being in focus. We have Vibha Padalkar of HDFC Life Insurance on earnings with ET Now. We have Charandeep Singh and Varun Dagga of Girik Capital on the street predictions for 2023. We also have Jogishinder Singh of Adani Enterprises, Sheshgiri Rao of JSW Steel and Aman Desai of Aether Industries on earnings with ET Now.
At 9:50 a.m., we have Rajesh Gandhi, who's a partner with Deloitte Haskins & Sells, and Mehul Beda, partner at Dhruva Advisors. Both of them are, of course, going to speak to us about the budget. That's going to be the big announcement at the start of February. 10 a.m. we have Prashant Kumar, MD CEO at Yes Bank on earnings of Yes Bank. And 10:15, we'll stick with the banking pack. V. Vaidyanathan, MD CEO of IDFC First Bank joins us for earnings itself. Then we have Nitesh Ranjan, who's the ED with Union Bank of India, again on earnings. And lastly, we have Chandra Shekhar Ghosh, MD CEO at Bandhan Bank, who's also going to speak to us about Bandhan Bank's Q3 FY23 earnings.
Well, that was the lineup that you need to watch out for today. Moving on, the Indian Navy is set to commission its 5th Kalawari class submarine named Wagir today. INS Wagir has been built indigenously at the Moscow Dock Shipbuilders Limited in Mumbai. 4 Kalawari submarines have already been commissioned into the Indian Navy, while Wagir is the 5th. And China reported nearly 13,000 COVID-related deaths in hospitals between January 13th and 19th after a top health official said that the vast majority of the population has already been infected by the virus.
Well, and Brazil's health ministry has declared a medical emergency in the country's largest indigenous reservation bordering Venezuela, following reports of children dying of malnutrition and other diseases caused by illegal gold mining. And India crashed out of the Hockey World Cup 2023 after losing to New Zealand in a sudden death 4-5 at the Kalinga Stadium on Sunday. The teams played out a 3-all draw at full time, taking the match into the shootout where India lost to New Zealand. And Arsenal defeated Manchester United 3-2 in a power-packed, close-fought encounter to a massive step towards the Premier League title. 5 points clear there for those following the Premier League. The Gunners are comfortably placed on top of the table and continue to remain there.
With that, we're completely out of time on this show, but you don't go anywhere. There's the market lined up right after this. Thank you for joining in. See you tomorrow.